when you consider the money still pouring into these Ethereum ETFs, there's some reason perhaps to be bullish there when it comes to turning the corner. And we saw that happen before. When that happened, Bitcoin hit a new all-time high. So if we run back everything, if history repeats itself, we'd see the same thing play out for Ethereum ETFs. Welcome, everybody, into another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studio in New York City. Excited to have you back with us as we are watching everything play out right now in this, I guess it's only been a week since we saw everything happen in the sell-off. And right now, Ethereum and Bitcoin prices in focus as we're looking at those right now. Ethereum north of 2,600. Important levels to watch there. On the Bitcoin front, we're over here flirting with that 60K level, which is wild to think just a week ago when we were down here underneath 50K for a brief moment in time. To now be back there seems quite nice. But of course, this week is going to have a lot of new economic data to throw all of that potentially up in the air. We're going to chat a little bit about the inflation read coming up this week, as well as consumer sentiment, new unemployment claims data. Not technically out of the woods when we look at the big macroeconomic indicators for any sense of the direction in terms of the speed at which the Fed wants to move on interest rates. So never a shortage of macro things to discuss. And of course, deeper in the crypto weeds, we shall go on today's show per usual. And want to give a shout out to our sponsor in today's show. It's brought to you by Stand With Crypto. Of course, our friends over there, huge players in bringing the space forward. 52 million Americans own crypto. These are entrepreneurs, innovators, and job creators who are deeply invested in building a strong America that dominates the emerging technology sector we call crypto. Stand With Crypto works to mobilize the crypto community around issues and elections. You can find out more and see where candidates in your area stand at standwithcrypto.org. Today, though, we want to dig into what we've been seeing play out. Despite the market jitters, we did see inflows, believe it or not. According to CoinShares' latest reading, it's not a huge bar on the chart when it comes to how much money came in through these crypto investment products, mostly Bitcoin and Ethereum. But it is a bar in the positive direction there as you see net inflows north of $150 million into those products, $176 million to be exact. Most of those, though, interestingly, as we're going to get into the show today, came into the Ethereum products, $155 million in inflows for Ethereum, which means that's the majority, the big bulk was all Ethereum action. And I suppose when we go back to that chart, Texas over here, it's going to be an interesting thing to watch when we look at how Ethereum can shape up versus Bitcoin price in all of this, because, again, they're kind of the more recent debuter when it comes to the ETFs and inflows, the excitement around those, what's exactly happening. Perhaps also worth noting that short Bitcoin exchange-traded products saw their largest outflows since May of 2023. That was $16 million coming out of those. So perhaps the shorts, the bears, maybe taking a step back and saying, look, we made money here on these. We don't want to be in them anymore. And we saw that play out last week too. So people buying the dip. Of course, the jump back hasn't been as quite as strong for Ethereum as it has for Bitcoin. But I think that's important to note. We also have this chart, Texas, showing the outflows from the Ethereum ETFs relative to the Bitcoin ETFs. And I should be more specifically just Grayscale's existing trusts that were converted. Chart's a little outdated now, but the main message still holds true when we think about how quickly money is being pulled from those Grayscale trusts, in this case, the Ethereum trust. And if you extended this chart out today, I was just looking at this, it's pretty wild. But when they all began trading, Ethereum's assets under management, or Grayscale's Ethereum trust asset under management, was about $9 billion. It's now about 4.99. So in that chart we just showed, it'd be more like 40% cumulative drawdowns in terms of where all the money had come out of ETH. So again, the speed at which people pulled money, huge. But then we saw inflows last week, according to the CoinShares chart we just showed you, mostly in the Ethereum ETF. So when you all balances out, it does seem like, and again, maybe it's too early to say that some of this is not just, money swashing around to kind of boost all this stuff. I'm not, no one knows for sure. But if you look at those things, you might say, look, there is some gasoline here for Ethereum to run back if it's going to rebound quite as strong as Bitcoin did in a whipsaw fashion when the volatility hit. Ethereum not back as much. And so when you consider the money still pouring into these Ethereum ETFs, there's some reason perhaps to be bullish there when it comes to turning the corner. And whether or not that accelerates, I would be in the camp that it might, given all of that, and the speed at which we've seen money come out of the existing trust well ahead of where we were for Bitcoin. And we saw that happen before. When that happened, Bitcoin hit a new all-time high. So if we run back everything, if history repeats itself, we'd see the same thing play out for Ethereum ETFs. But that's kind of catching you up on outflows and inflows as we move forward. Now, again, I don't want to say there aren't catalysts for Bitcoin either. We saw, this is our second piece of news in our recap per usual, Marathon coming out and saying that they are going to be raising $250 million to, what, Texas? What do they want to do with it? Buy more Bitcoin is what they say they want to do over here. In fact, it's the third paragraph in this press release here from their investor relations team that Mara intends to use the net proceeds from the sale of the notes to acquire additional Bitcoin and for general corporate purposes. And of course, this kind of follows what we've seen too from MicroStrategy. Perhaps not surprising, we saw Michael Saylor and MicroStrategy issue signals that they were going to raise an additional $2 billion to buy more Bitcoin. So he's still in the same camp as well. But we haven't talked a lot about the miners, and that's one of those things that always happens in a cycle is how much might they sell? What is their, own corporate finance structure looking like? How strong are they? Might they need to dump some Bitcoin? And it always happens. If you're a miner, you kind of need to balance those things. But to see Marathon, one of the largest miners, come out and say they want to raise $250 million right now, when Bitcoin's at 60K or around there, very interesting to think about some of the strength, relatively speaking, in past cycles, that they're leaning in and saying that they would want to buy more Bitcoin. Keep in mind, these are miners who often have generally pretty good exposure to Bitcoin just by virtue of mining it. So for them to come out and say they want to raise $250 million more to allocate to Bitcoin, I think goes to show where confidence levels are in the space at our current price level. And I guess, we talk so much about the fear and greed index when it comes to Bitcoin. This is one more thing that I would have added in our last segment here in terms of where we're at on the fear and greed index right now, generally speaking, for Ethereum, which is still, again, nowhere near the level of greed you're usually accustomed to seeing. So I think the move by Marathon shows, perhaps on the chart, still kind of level-headed over here on Ethereum land. Still a lot of room to go before we're anywhere near some of those greedy levels. Elsewhere, though, in the land of politics, it was interesting to see over the weekend a lot of crypto companies, mostly the exchanges, by the way, come out in favor of Polymarket. These are kind of the headlines that we've been watching. These are the big ones. Of course, Polymarket, the big prediction news site, you could bet on anything from Donald Trump's percentage chances to win the election to, I don't know, sports, some random stuff on Polymarket, to be quite honest with you. But we're seeing a lot of crypto companies step up to pressure the CFTC to withdraw their proposed rule on event contracts, being led by none other than Elizabeth Warren in the Democratic camp, basically saying that, look, we can't have these things happen. In fact, this is the letter that was sent over to CFTC Chair Rostin Benham, just signaling out in this letter, which is also authored by Elizabeth Warren. The last thing that voters heading to the polls need are bets waged on the outcome of that election. Voters need action, as proposed by the CFTC in this rule, to restore trust. Elections are not a for-profit enterprise. So basically, the CFTC coming after Polymarket, and you got not just Gemini, as we just said, but also Dragonfly and Crypto.com. Basically, all the legal teams in crypto are coming out and saying, hey, look, this is an important thing. We need to defend Polymarket's right to have prediction markets and everyone's right to bet in these prediction markets. And perhaps you might say, that seems odd. Why are all these other crypto companies coming to Polymarket's defense? And if you look at how much money is poured into Polymarket, this is an interesting chart, Texas, this one right here. This is the volume of bets on Polymarket over the last, Well, this is monthly. So you can look at it at the beginning of the year, bet volume not necessarily too high. This is what we in the business call hockey stick growth. This is a huge explosion, and they topped $1 billion in cumulative bet volume just last month and already off to a hot start here in August. So I think all the crypto companies are witnessing what's happening here. I can make this a little bit bigger. And seeing that Polymarket has indeed become one of the major use cases of crypto because it's built on the blockchain, and that's kind of how this goes. But you've got all these companies coming out and saying, look, this is growth for us, and so we can't just sit back and let the CFTC to corner this market off and say that you can't build stuff like it. So it's not just Gemini, it's Dragonfly. We also saw Coinbase come out as well. Basically, all these legal teams coming together to rally around Polymarket, which perhaps, again, when you see where the money's going, not surprising to see such fervent defense. I also find it kind of funny that everyone's covering Polymarket prediction chances, and of course right now everyone's really focused on the US election, but I don't know why necessarily that's a crypto story. I think it's just always interesting to see so many crypto outlets continue to cover where those prediction markets stand. But it is important. I mean, like, it's a revealed preference rather than just polling somebody. So certainly if you're putting money into a bet, you have more confidence in it. The pushback from all of these legal teams seems to be that there is a benefit to society for keeping these prediction markets going. And so in that sense, when you dig into kind of what these companies are saying, it is mostly that. It's that these platforms, and it's not just Polymarket, but in general, the idea of these do enrich our understanding of politics and where markets are at. This is the quote from a law professor at UCLA in CoinDesk's write-up. I think they enrich our understanding of politics, the news media, and conventional wisdom, and to the extent to which crowds consistently get certain types of political predictions wrong. So, again, all of these people kind of coming together. We'll see what happens. Of course, the CFTC, supposedly the more crypto-friendly regulatory arm relative to the SEC, but right now, Polymarket GPS gated anyways. Kind of need a VPN to even play around with any of the prediction markets, at least on that side. So interesting to see that all play out, and we'll see what happens with Polymarket and whether or not Democrats continue to step up. All 8 of the politicians who signed that letter pressuring the CFTC were Democrats. Another thing to keep in mind as we watch the Republicans, mainly Kamala Harris and Donald Trump, jockey for that crypto vote. Moving on, though, not just prediction markets in focus in today's show. Of course, there's a lot of other things happening as well. And one of those things is Athena stepping up and adding to it not just its stablecoin that we've paid attention to before. We've had Guy Young on the show, but DL News with an interesting write-up looking at the reasons as to why Athena is launching its dollar token on Solana now too. Of course, this is a pretty controversial stablecoin, one that has been compared to Terra's UST in the past, which, as we covered with Guy Young, is not necessarily a super fair comparison, mostly because, again, it's an experiment, but it's not the same thing as Terra. Nonetheless, you can watch our full interview with Guy Young if you're trying to figure out what those risks are. But a lot of talk right now about why Solana is so important. And Brazil, we were talking about this, Texas, Brazil approved the first Solana ETF as well. So that's another reason why Solana is more in focus too, because a lot of people are excited that you might see a Solana ETF in the US after we've seen that Brazil approval. You know me, if you've watched the show before, that I'm not in that camp because there's a lot more shit that needs to happen before you're going to get a US Solana ETF. Not going to happen, at least as far as where I sit, until at least probably March 2025-ish. So again, I'm always pumping the brakes on reasons as to why that might not happen soon. But if you do step back and think about where we're at risk reward on Solana, I think it's fair to, again, add it to the list of reasons why it's confirmed its spot as the third crypto and a serious challenger. The first episode we ever did really was Anatoly coming into our studio and talking about Solana as a quote-unquote Ethereum killer. And as we look at kind of where that's setting up for where Solana could end the year, it's important to remember that Sean Farrell, friend of the show, who's been right most of the time, has a $500 price target to end the year for Solana. And I don't think that gets any crazier when you consider that Athena is expanding to nowhere else but Solana as well. So again, we raise it mostly because of two things. One, Athena's weirdly held up pretty well in this market pocket of volatility. A lot of people were saying, look, it was only going to take something like what we saw play out this week to come in and throw off Athena's stablecoin, right? It was going to be doomed just like Terra. Of course, not the case. Though it has come down a little bit. We did see redemptions. And of course, that always happens when you have volatility, is how many people are going to rush to redeem their stablecoins. This is the chart when we look at market cap on Athena right now. So down slightly from maybe 3.6 billion. Now after that rush, let me make the chart a little bit bigger here. After that rush, closer to 3 billion, but still one of the larger stablecoins out there. And very interesting, should we see any more of this debanking discussion get louder? And also this being a big year for Circle and USDC, that stablecoin as well. Having alternatives, not so bad. So interesting to see Athena hold up through the pocket of volatility, expand to Solana. It continues to grow, and something to keep our eye on. If you haven't watched the interview with Guy Young, founder over there at Athena, go ahead and check it out. It's on our YouTube page. Worth a watch, I think. Lastly, as we wrap things up and look ahead to what might happen this week, we would be remiss if we didn't point out that there are a few other huge macro drivers to pay attention to when it comes to markets in general, not just the news that will drive the crypto space, but really what happens moving forward. And there are no shortage of things to keep your eyes on when it comes to the macro data. Mainly, Wednesday, we're going to get inflation data, core CPI numbers coming out. Those ones, per usual, 8:30 a.m. on Wednesday, always move the market. Whether or not we're going to see inflation come down or not, big question mark. Perhaps a bigger question mark, though, on the labor side in the Fed's two-prong mandate, not only price stability, but also labor market growth as well, making sure that the labor market is moving in the right direction. So we're going to get updated jobless claims numbers and what unemployment might look like. Of course, on Friday last week, that's what triggered all the pocket of volatility, as well as the Japan yen trade. So keep in mind, the jobs data perhaps more important now than inflation data in where the Fed is looking forward in rate cuts. And Friday, we're also getting consumer sentiment in terms of the vibes recession. This might be the chart that we end on, ladies and gents, because I think it's important to highlight. This is the index of consumer sentiment. And the young Gen Zs out there, the niños, the kids, they're always talking about a vibes recession. And January, we're up at 79. So again, these are just kind of the normative read on the consumer here in the U.S. Consistent decline mostly. I mean, I guess, March was chilling. But then ever since March, we've kind of had this slow decline over sentiment in terms of the U.S. consumer. So the read on Friday could be interesting given all the market volatility we've seen. The read on Friday could show that trend continuing in terms of worsening of consumer sentiment, of worsening of the vibes recession that we've already seen play out this year. And again, heading into election, that's going to be important for kind of the larger pieces of whether or not Kamala Harris can win versus Donald Trump. It's not necessarily market volatility that normally drives where voter confidence moves. It's more the underlying economy. So all of those numbers, whether it be unemployment, or perhaps these consumer sentiment numbers that are somewhat related. Very interesting to see as we move forward in this year. And of course, trickles into the small little world of crypto as we watch the bigger world of macro markets and economics across the globe. That's going to do it for everything in our news recap for this week. I appreciate you joining us once again. And as always, you can head to coinage.media to stay up to date on all the biggest stories in Web3 and join our experiment to co-own the first decentralized news outlet. Own it along with me, everybody else, and the co-founder of Netflix as well. For everybody here at Coinage, I'm Zach Guzman saying goodbye from our Brooklyn studios. We'll see you again soon.